All right, welcome back to week 6, part 6 of 10 of this trading series. I'm relatively excited for this class. I think it's a pretty unknown concept and not a lot of people use to their advantage. So this week we are going to be covering options flow and volume and how to read them. Going over the agenda really quick, we just have what is options flow, or what is flow and volume, flow versus volume, how to use options flow and share volume, connections to TA, pros and cons, and then we just have that Q&A and conclusion at the end as always. So jumping right in here. What is options flow? Options flow or volume refers to the institutional and individual buying of options. So looking over here to the right, we have flow algo. This is just one of many options flow algorithms that you guys can get. There's some like Quant Data, Flowtopia, Unusual Whales, any of those big names that you usually see on Twitter, Cheddar Flow. They all cover the same thing. It just costs money to access this information, so that's why there's so many different brands. They all tell you the same thing. This is just the one that I use. So the main underlying thing here is buying, so I want to really get that across. For flow, especially on options, you only know when there's an order that comes in. You don't know when it's an order. You don't know when it's sold. So looking on the example here, SPY 399 calls, bought 7,000 of them when SPY was at 395.69, bought them for $1.19 each, 833K in premium. We don't know when they're going to sell this position. We only know that they ordered it at the timestamp right here. Next, we have volume. So volume refers to the total amount of shares exchanged, both bought and sold. So these aren't just buying. These are both buying and selling. Again, you don't know when people are selling. You can if you have access to, like, Webull order books. I don't think Robinhood has order books. TD does. TD has their book map that's very, very useful. So this is the shares exchanged for said equity on said day. That's where you'll see your volume often in the top right on Webull. If you are on mobile, you click on SPY, for example, and it'll say 78 million in volume for the day. That means that there was 78 million shares, both exchanged, bought, and sold. And then this is the last little bit before we get into the live, looking at flow and options volume. So we can't really use examples of it without looking at flow algo. I'll just show the one that I use. You can go out and find anyone that you want. I believe that Unusual Whales is like $45 a month. Flow algo is $150. Cheddar Flow I think is $200. Quant Data somewhere between $100 and $200. They're all about the same amount. Unusual Whales is undercutting people by quite a bit, but it does cost, again, a significant amount of money to gain access to this information. So the stock exchanges and a lot of people don't know this, there's not just one main stock exchange. There's, I believe, 18 or 19 in the US. They're adding more every couple of years. The two major ones are the New York Stock Exchange and the NASDAQ. And then on the right here, you have your additional stock exchanges like Boston, Chicago, Chicago Mercantile, Chicago Stock Exchange, Miami Stock Exchange, National Stock Exchange, Philadelphia Stock Exchange, so on. Almost every major city in the U.S. has their own stock exchange. 50, 60 years ago, it just used to be New York, London, Shanghai. Now we have all these different ones because it makes it easier to buy and sell equities from various locations in the U.S. since everyone has access to buying those. So the two major ones, as I said, New York and NASDAQ. Something that most people don't see, and this correlates to flow and volume. If you're ever buying shares, if you're ever buying options, so this is an option example. I didn't get one for shares. If you're ever buying options, you'll see the bid and ask on the bottom, as always, and then you'll see these 4-letter combinations here. So these aren't tickers. These aren't just random letters. These are saying where you're buying your options from. So this 41XNAS, this is the NASDAQ's ticker, which is the second major stock exchange. XNAS stands for NASDAQ. MPRL is just a minor one. It's not on the secondary list over here. My guess is this is probably somewhere in Miami because it starts with an M. Could also be Paris, Rio, any of those. These are telling you where you're buying your shares from, where the best available bid and ask are. So in this example, Chicago Stock Exchange is CHX. National Stock Exchange is NSX. Let's say that Chicago's offering 50 of these calls at $1.05. So because that's not the best offer, the NASDAQ has a better offer than that. Same for the other side. If MPRL isn't offering the best one, it will rotate out with, say, PHLX. These are just minor things. You don't really need to care about where you're getting your options from, but it's a little bit of information to know if you're buying and selling all day, or if you just wanted to have a fun fact for other people trading. So that's just the ending remarks there. Getting right into it, though, we'll look at, so again, I use Flow Algo. So all of this information, it does look a little mind-boggling at first. You're just going to start in different corners. I'll refresh this. No, I'll just leave it as it is. So today, I can pull up the SPY chart from today real quick. So if you look at the 5-minute SPY chart from today, zoom in here, we can see it was a significant gap down, and then it was pretty green on the day. It was a directional chop up. Wasn't too directional. We did end the day up from where we opened. But going into the flow here, so the flow sentiment for today, this is the percent of calls and puts bought right here. So this says the put to call ratio is 71%. There's 71% more calls bought than puts, or the percentage out of 100, 71% was calls, 30% was puts. And this isn't updated for today. This also includes yesterday's price action. That's why these numbers don't look right. And then the sentiment for today was it was neutral, but there was more bullish action today than there was bearish, meaning that more people entered into calls today than they did puts. So continuing on over here, this just tells me how many puts were bought in the day. This tells me how many calls. This is your dark pool order block. So this tells you where shares were bought and sold for the day. The red is usually where shares were sold. The green usually just has any significant buys. And then these are all just minor share adds. 1 second here. There you go. And then you have this just comes with Flow Algo. This gives out some signals every once in a while. This is the main bit that most people want to see. So starting off here, you have 3 different types of order blocks or flows. So sweep means that all the best bids were bought over multiple exchanges. So that's why we're looking here, all these stock exchanges. This means that 2,500 contracts were bought at $343 a piece, $858K in total premium. Sweep tells you that all the available best bids were bought on all the exchanges. So it's not just one exchange that offered all of them. Someone went in and ordered 2,500 contracts. They didn't care if they got filled all at 3.43. They just wanted to buy 2,500. So they swept all of the stock exchanges available. They got the best fill on all of them. So the average price that they got filled for was 3.43. Some of them might have gotten filled at 3.5. Some of them might have gotten filled at 3.35. The average was 3.43. When you see a split, this means that it was a single stock exchange. So going back and looking at this again, 52 were offered at 103 for MPRL. On Flow here, there was 1,000 of these Apple 52 or Apple 146 calls bought at 52 apiece. This was all bought on one stock exchange. And then lastly, you have your block orders. These are privately negotiated deals. So this is between institutions. It can also be between individuals, where one individual offers 500 contracts. This typically happens when someone owns the shares that are needed to write those contracts. So since there was 500 bought, this means that someone had 50,000 shares sitting there of Apple to write those covered calls. And then they wrote calls with those shares, and someone bought those available calls. So those are the three order types. The most important one to look out for is the sweep order. These block ones are usually done slowly because they're privately negotiated. The splits are done when people have an order set in at a limit price, so they don't want to get filled at anything but 52 in this example. The sweeps mean that people they quick to the trigger. They don't care if they get filled all at the same price. These usually mean that there's a good move going on in price action. So these are the most important ones to watch out for, sweeps. So how to read this, just looking at IWM. So you have your ticker, IWM, the expiration of the contract, so April 21st, the strike price, 178, and it's a put. And that's also verified here. When it's red, it's a put. When it's green, it's a call. But it also prints it in letters right here in case you didn't want to go off the color. You have your timestamp where it happened, and these are accurate. These happen within 30 to 40 seconds of when the order is placed, is when you get that information. You have your small details. You don't really need this. All you need is the premium, and you can kind of do it in your own head. But this just tells you 2,500 contracts bought at 343. And then you have your algo score for flow algo. This tells you the significance of the order. And then this is just the sector. These two last columns don't really matter. I do prefer to use the algo score, though, from time to time, because this just tells me the higher the score is. So this is 89%. It means that it's a relatively unusual volume. It's unusual flow. It means that I should probably go and check out the chart on the ticker ZS. So that's when you go over here, you pull up ZS, you look at the algo score. This is just a personal thing that I do. I always go to the daily because it was a far out expiration. It wasn't for a weekly. Let me close that window really quick. So this was for next week's expiration, March 3rd. I go to the daily time frame and I see, oh yeah, this might have a potential to bounce up to 143. Could go up to 135. Let's keep an eye or watch list this option, see what it does, and then see how valid these algo scores are. And then I continue down the list doing that. You have XOP that comes in. This is April 21st, 130 calls. Again, go over to XOP, and you can see, hey, we might be in an uptrend here. Looks like we might have bottomed out. I'll keep an eye on these contracts, or you could just follow them blindly. The benefits to doing this is you get to see several tickers, so ones that you don't usually watch. Typically, if you only watch SPY and Tesla, for example, you're not going to pay attention to much else. But if you have flow, you'll see like SI, CTRA. Most of the time, this is good for catching like meme stock moves. If any of you play that, it's also good for finding some like hidden movers in the market. So let's see if I can find one here. You want to look for these high algo scores. Let's see. So XPEV, that's probably nothing major. They also do flow in. So when you're seeing a lot of sweeps come in back to back to back to back. So this is a good one right here, an EWZ. When you see a lot of sweeps come in back to back, that means that someone's eager to get into that position. So this looks to me, and we can see it pretty well from today. So these are all April 21st expiration. Someone swept all the available exchanges 4 times in a row, excuse me. All $27 puts. They put in multiple orders, probably need to get money free to place these orders, so that's why they're in 4 different blocks. And then they swept all exchanges to get these fills, and then that you come over to your chart and you can see, hey, looks like we might be breaking out of a bear flag here. Let's keep an eye on this, and likely probably see this continue down to, I don't know, 26.50, 26 flat. So that's just using TA that we've practiced in the previous 5 classes, along with this flow. This isn't something that you need. It is something that's very useful. You don't even need this chat box on the side. It's pretty useless. This is kind of like Twitter or Reddit. I never pay attention to this. The thing that I do pay attention to the most, I would say, is this equity blocks and dark pool orders. So these tell you when people put in massive orders for shares. So at 4:32 today, someone bought 750,000 shares of BABA at $88.93 a share, $67 million in total. And another person also bought 750,000 at 4:30 for the same price. So these tell you people are actively buying these shares. The ones that are green mean that they're high volume, and then you'll see ones that are red like this. This means that people are long selling. By that, I mean people are selling the shares above what the current price is because they want to get out of it. This is making up the bid and ask. And then you'll see some that are green. These mean that people are eager to get into the, let's see if I can find any here. It doesn't look like there's any from today. It makes sense because it was a pretty red day. The ones that are green tell you that people are buying below what the bid is, so they're trying to get a lump sum of shares for relatively cheap, but they're also long on the equity. I believe, yes, there it is. So this order book right here on Webull, this tells you what the active orders are for the day. So this makes up the bid and ask. 1,200 shares bought at $395.36. 675 shares sold at $395.38. This gives you the smooth price action that we talked about last class, 2 classes ago with the supply and demand. It's smooth on the way up, and then you'll see these little jumps. These often make your supply and demand zones. So if you didn't want to chart, you could just look at this order book on Webull and get your supply and demand zones that way. And then this is just your dark pool orders here. Other than that, it's very simple. You just do that same method. Look at the algo score in this one. Some places don't have algo scores, but you can just look at the size. Usually the higher the premium that's put in, the more significant it is. That's not always the case because some equities are just expensive in the first place. So SPY options for April 21st are going to be expensive. They only bought 1,500. That's why the algo score isn't very high. They bought 1,500 at 559, whereas if we look at the highlighted one that's significant, this is 1.2 million on a ticker that's not usually traded very often. Yes, it is for April 21st, but this isn't a high liquidity ticker. This is a low liquidity ticker. It doesn't have much volume come in, so this is probably 5 to 10% of the daily volume alone on one order. So this typically means, if we go pull up XOP, typically means that someone is pretty bullish on something, and this makes sense. This is oil and gas exploration. If we look at the daily time frame, we can see a pretty strong bounce off this ascending trend line. And again, this is just using methods that we practiced in the previous 5 classes. This is an ascending trend. It's riding it up. Likely going to see probably 145, 150, and then pull back, that trend line again, and ride up. But this isn't a ticker that I usually look at. It's a pretty obscure ticker, and I only found it because I used the option flow. So the way that I look at this is if I can make back $150 a month off of looking at some of these flow, So SPY calls, if I see multiple coming in on a sweep and it's 330, and we can do this on a 5-minute chart here. So we go to SPY, we go on the 5-minute chart, 330. Where is that here? 330 was this candle right here. The candles on TradingView are delayed by 5 minutes if you didn't know, because it takes some time for them to form. So this is a 330 candle, pretty much bottomed out here. We see multiple orders that come in for SPY calls, 0-day expiration, 397s. They're all sweeps, so they're all buying all the available bid and ask, or the best bids for that exchange or multiple exchanges, and we can see that price curled up, sharp push up at the end of the day, and we can kind of validate this order. So all of these orders for that matter. And the same goes for if I was looking today at, I'll just scroll all the way down to the beginning of the day. Let's see here. So Tesla, 3 sweeps in a row, 195 calls, 200 calls, and 197.5 calls at 11:27. So we go over to Tesla's chart at 11:27. Zoom in here. So time frame at the bottom, we're looking for the 11:30 candle right here. Tesla was pushing up relatively aggressive. Look at this flow, 11:27 again, timestamp, sweeps, all for 300, 755, 376, all pushed up. And we can see that Tesla rode along with that. The downside to flow, and the only thing that I kind of tell people not to use about it, is that you can't see when people are selling these positions that they get into. You only can see when they're buying them. These, again, are when the orders are put in. We don't see when they sell them. So for this Tesla position, these 3 positions, for example, yes, Tesla did run up substantially after they entered, but we don't know when they sold. So we don't want to be holding blindly. We just want to use this flow, and this is how I use it. I'll go to NVIDIA, for example. So today, I took a trade on NVIDIA over 231.64. That was at 11:25, so 11:30 that I entered that position. I held through these 2 candles, and then I sold on this candle right here, 232.70, for a 17% gain on those contracts. So I go over to the flow, and that was, again, 11:30. And at that time, you can see that NVIDIA had, let's see here, 1, 2, 3, 4, 5 sweeps come in for calls. And then at 12:17, it had a $3.5 million sweep come in for puts expiring next week. So at 11:30, the flow further validated the trade that I was in. I didn't use this to solely get into the trade, but it did validate the trade I was in. And then we can go and look at 12:17, this red candle right here, followed by this little tiny green candle. That 3.5 million that came in, they timed that pretty perfectly. They made whoever entered that position anyway. If I was looking for puts at that time, this amount of premium coming in, and again, the algo score on this was 117. 117% means that it's very, very likely that this plays out. It's a very unusual flow. 6,000 contracts for at the money for next week's expiration. This tells me that I should probably look into getting puts at the moment, and then it's not overshadowed by this 101K. This is likely just a hedge for whoever entered this position in case there was a massive spike up. So this 101K would cover some of the loss because it's at the money on that NVIDIA position. But these are just methods you can use to use flow to your advantage. I don't recommend you use flow entirely. I use it to further validate the trades that I'm in, and that's about it. So I use, if I'm in a trade like I was on NVIDIA today and I see a bunch of green flow coming in on it, I'm going to be more comfortable in that trade because that means that people with larger amounts of capital, larger amounts of bankroll are entering the same position as me. it's unlikely that they're going to lose as much as me, or they see something similar to what I'm looking at, further validates the trade I'm in. But if I see some puts come in while I'm in calls, it might make me hesitant to look long. It might make me try to look for something else in the chart. Typically, the larger the order is, so the more money that comes in, the more accurate it is. There's people trading with millions and millions of dollars that are more successful, same success as me. Let's just further validate some of the trades that I get into. That's about it. So you don't need flow. It's not vital to your trading. It does help me with getting trades that I wouldn't see otherwise. So like FXI, you get to see all these different tickers all day. You get to pull up several charts throughout the day. So this example, run at 304. We go to run's chart on the 5-minute, see what it did at 304, and you can see it had a very, very sharp move up at the end of the day. So whoever entered that position, whoever put the order in for that position, capitalized on that move. The algo score highlighted it because it's pretty unusual activity. So it just, again, helps you identify tickers that you wouldn't otherwise be trading. It helps you find some obscure names, and then also just further validates trades that you're in or invalidates trades that you're in. But again, you don't want to be using this by itself. You want to be using it in cahoots with your TA. But that concludes it for this. No homework for this time, obviously. It's just looking at flow. If you want to get into flow, or if you want to use flow along with your trading, Flow is a great one. You can just go on Twitter. Unusual Whales is another one. So you have all of these different names. Unusual Whales, you'll have like Cheddar Flow, Flowtopia. This one's should be coming out relatively soon. So you have all these names. They all have the same order. They all have the same volume that comes in. It's just the money that it takes to get access to the information for this flow. It's very, very costly, but it does pay off in some cases. But that is all for this week. I will catch you guys next week for Heikin-Ashi candles, I believe. And then after that, we have swinging and the IV strategy to end off this section. I will see you all next week.